When someone passes away and is owed a refund from the IRS, the person responsible for handling their affairs can claim the refund using IRS Form 1310. This form is typically required for executors and representatives who need to file tax returns on behalf of the deceased taxpayer and claim a refund. For instance, if a surviving spouse receives a refund check that includes the deceased spouse's name, they can have the check reissued in their name by returning the check marked void and including a completed Form 1310 and a written request. However, there are situations where Form 1310 is not required. A surviving spouse, for example, is not required to use this form to claim a refund, as the IRS will automatically issue any refund based on their filing status. Additionally, when filing original final returns on behalf of a deceased taxpayer, a personal representative is not required to use Form 1310. Instead, they should attach a copy of the court order or appointment to the submitted returns. If tax returns will not be filed, Form 1310 is unnecessary. It's worth noting that a personal representative is defined as the executor or administrator of the deceased person's estate, as appointed or certified by the court. The IRS provides an online questionnaire to help determine whether or not a person is required to file. In terms of frequently asked questions, a death certificate should not be attached to the deceased taxpayer's return, but the person filing should keep these records in case the IRS requests copies later. A surviving spouse is considered married for the full year after their spouse has died, unless they remarry that year, and may use married filing jointly or married filing separately. The same tax deadlines apply for final returns, but a surviving spouse or representative can request an extension to notify the IRS that the taxpayer is deceased. The person filing should write "deceased" at the top of the return, followed by the deceased person's name and the date of their death.